Welcome to The Explainer. Today, we're diving into a massive shift that's happening in the business world. For years, sustainability was kind of this nice to have thing. Well, as of right now, it's become a high stakes financial reality.
For the longest time, the answer to that question was pretty straightforward. It was all about location, the size, who your tenants were. But that whole equation, it's not the full story anymore. Because as of this month, a really powerful new factor has officially entered the chat, and it's one that is putting billions of dollars on the line for property owners all across the country.
So let's get into it. We are now officially in the enforcement era of sustainability. Those deadlines for building performance standards that seemed so far away, well, they're not on the horizon anymore. They're here.
And just look at how tangible this has all become. For building owners in places like New York City, Denver, and DC, what were once distant regulations have suddenly morphed into immediate and pretty significant financial risks. These aren't just warnings anymore. We're talking about real annual penalties for not hitting these new emissions targets. I mean, really think about the scale here. $500,000 per year for one single building. This is the financial stick that regulators are now using to really push this transition to greener real estate. The message could not be clearer. Doing nothing is now incredibly expensive. But this new reality isn't just about avoiding penalties. It actually introduces a really fundamental strategic choice for property owners, one that could either sink the value of their assets or unlock some enormous new opportunities. And this right here, this is that fork in the road. On one side, you have a massive amount of real estate, 1.5 billion square feet, at risk of becoming obsolete. But on the other side, there's this huge surge in demand from tenants for sustainable, low-carbon spaces, and that demand, it's projected to outpace supply 3 times over. And this isn't just some theory, right? The data on the carrot, the reward for taking action, is incredibly compelling. Just look at these rent premiums. A sustainable retrofit at 1 Madison Avenue in New York is commanding a 32% premium. It's a similar story over in Boston. This shows that investing in decarbonization isn't just a cost center. It's a direct line to higher revenue. Now, you might be thinking this is just a real estate issue, but that's really only one piece of a much, much larger puzzle. Let's zoom out for a second and see how this trend is sweeping across the entire global economy. From big tech to global finance to heavy industry, the biggest players in the world are making multi-billion-dollar moves. You've got Google investing big in carbon removal, Apollo pouring billions into renewable energy, and regulators cracking down hard on greenwashing in the airline industry. What we're seeing is a truly systemic shift. And this also shows just how sophisticated companies are becoming. Look at State Street. They're tailoring their approach based on regional politics, pulling back from a climate initiative in the US, but staying fully committed over in Europe. It shows the global trend isn't stopping. It's just adapting. And on top of all of that, the actual rules for corporate transparency are all starting to merge into a new global standard. You've got the EU's new directive, California's huge new laws, and these international financial standards being adopted everywhere else. There's just nowhere left to hide. And it's not only regulators. Powerful investors like BlackRock and Vanguard are the ones demanding this transparency, which is creating immense pressure from the market itself. Okay, so with all this policy pressure and market pressure, what does making a change actually look like on the ground? Let's look at a fantastic case study that really brings all of these concepts to life. So, Children's of Alabama, a massive pediatric medical center, took on a complete modernization of its campus. And we are not talking about just changing a few light bulbs here. This was a strategic, deep retrofit of the facility's core infrastructure, from a whole new utility plant to modern automation systems and even advanced heat pump technology. And the results? They were nothing short of dramatic. They got a 76% reduction in their natural gas consumption. That is a massive cut in their carbon footprint and the reliance on fossil fuels, all while running a critical healthcare facility 24/7. And here's the direct financial payback. Over $680,000 in energy savings, year after year. This just proves that sustainability isn't only about compliance or being green, it's about smart, long-term financial management and just being more efficient. So this all brings us to the most important question, right? After seeing all the risks, the rewards, and the real-world results, what should you take away from all this? What's your next move? First off, check your compliance status immediately. Deadlines like that May 1st one in New York are closing in fast. Second, use the data from your own buildings to find opportunities for investment, just like the hospital did. And third, quantify the value proposition. Don't just focus on the costs. Build your business case around those proven 30 to 32% rent premiums.
Ultimately, it all comes down to this. The rules have changed, the market has spoken, and the technology is proven. The choice between paying the price of inaction or profiting from the premium of leadership, well, it's getting clearer every single day. And in this new era, standing still is the riskiest move you can make.